Hi, we will conclude the course. The first chapter is Introduction, where you are introduced to this course. After introduction, we discussed order placing procedure. That is, you're using only buy, sell, and stop loss order. And these are wrong orders because if you buy, then you are in a risk of losing money. And you also place a stop loss order. Now, when the market falls, it usually opens gap down. So if your order is placed within the gap, then when it will open lower, it will automatically, the system will sell your shares. So you will lose money. And if you have placed your stop loss order at say 10% and the price opens 15% lower, so you're not losing 10%, you're losing 15%. We have discussed how these orders affect, like what are their mathematical procedure, its effect. Then in psychology we discussed the thinking. Example, what is common person's psychology or his thinking? Like you, what do you think? How do you trade? How stop loss order affects you? Because once you sell, you are in a dangerous position. Once it's sold automatically due to stop loss, you lost money. And then you are again at the first step of the investment. That is, what do I do now? Then we discussed institutional investor and hedge fund psychology. That is, if an institutional investor needs to invest a million shares and buy a million shares of XYZ stock, he cannot buy it right off. He needs to wait because if he will buy it just like that, the price will run up. And if he waits, he doesn't know that the price will stay here or not. So he uses the options technique that we discussed in the other chapters, the crux of the course chapters. Now, institutional investor doesn't have to worry about losses because, as we discussed in the crux of the course chapters, he's already making some percentage profits in the year. So he knows those profits combined makes an healthy percentage. And in doing so, he's buying his favorite share that he thinks is a good share. Then we discussed the broker psychology. How the broker doesn't care if you make money or loss. What he cares is that you overtrade because on every buy he makes commission, on every sell he makes commission. So he needs you to play stop loss so that the share gets sold off and he makes commission. Then there is the current scam against you. How the orders that are being told to you buy, sell and stop loss order affects your trading decisions. You buy but you don't know if it will make money for you or not. You are in a bad state of mind because it's not like buying a car. You go, you check the car, good, it's a good car, you buy it. This situation is somewhat confusing. You buy it, comes down. You know it's a good company, everything is good, but you don't know why it came down. And then your stop loss is placed. So it hits, you lose money. And then again you are standing on the first step of the stock market. What do I do now? Then we discussed the psychological effects that affects you. How you became angry. Because in inside you a battle starts. What do I do now? What is the mistake I made? And those effects increases the losses. Then we discussed option trading. In option trading, we discussed what are options, what basically does it mean. Example, call options, put options, and its history. How it options trading has been like available since last many hundreds of years. How in the olden history people used it and made good money. Even though at that time currency or like paper money was not available. Then we discussed the crux of this course. In the first part, we discussed how you can use put options. That is, you already you are thinking of purchasing a share, so you can float a put option, and that will be basically saying that I will buy this share at the end of, let's say, 2 months at the rate that is today. So it's the same thing as buying, but you're not buying basically. You have a fixed loss. So for 2 months, you know that you have bought a good share, you have researched it, it will work good, its result will come good. You bought the put options and it went up, made you money. Then we discussed how the call options help you. That is, in the call options, you place a trade which says that it's your obligation to buy that share at a certain rate. Now, as the price rises or it stays there, you know you're making money. And if it falls, you know it's a good share, you will buy it cheaper than today. And basically, you're buying good quality stocks, as dividend stocks usually don't fall much or don't rise much. They stay in a certain band, that is, their high and low doesn't usually exceed much. It stays within a certain band of prices. The reason is its dividend yield. If it rises so much, and initially if its dividend yield was 10%, let's say assume 10%, then as it rises from 50 to, let's say, 100, so its dividend yield decreases to 5%, because at 50, if it was making $5 per share, at 100 again it is making $5 per share, so the dividend yield came down, and that makes the stock not worth it for like institutional investor. And if it falls, then it is really good, people starts to buy. So usually these good stocks stay in a band, and that's where option trading comes in, because you know it won't fall that much, so you buy it, you place a option trade, and you know if it comes there, that's a good price for you to buy. And if it doesn't, you're making 1.5% per month. At the end of the year, you are making 18% return. I have even found in the last year stocks that made 5% or 7% per 2 months. So that makes it 42% per year. Now, hedge fund or institutional investor even use leverage. Now, let's say 42% is all your money. So if you install leverage, let's say 50%, then this 42% increases to 80%. You increase to more than that, your profit increases. So that's how this option trades helps these institutional investor and these hedge fund managers to make tons of money. And even if they lose in some trade some money, they know they have like made this much money, so it will be your profit will be diluted, but you would not be in a loss. And the next is the bonus chapter. Now in the bonus chapter, you will understand that you can post that you have completed this course on your social media profile. That will help your employer and your friends to know that you are working on your life. And then I will post a recommendation for you. And when they will see that you are already working and this is not a fake post, recommendation came up, so it will be good for you. Your employer will see that this employee is good. Your friends will see, oh God, this person is working on the correct phase. And that will help you and will also inspire your friends and other employers to follow you, to discuss with you. Thank you.